Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking about the big banks and my guest is Randy Watts, Senior Portfolio Manager at O'Neill Global Advisors. It's results week for America's finance giants. JP Morgan, Goldman Sachs, Citigroup and Wells Fargo all report quarterly results on Wednesday, with Bank of America and Morgan Stanley up on Thursday. Those numbers are expected to show investment banking is making a comeback after 2 weak years, while the rise in long-term rates will also have boosted their interest income. But what will the year ahead hold? Let's ask Randy Watts of O'Neill Global Advisors. Randy, hi. Let's start then with the investment banking arm of the business. Is deal-making making a comeback?
We really think it's going to. If you look at equity offerings, for example, in 2021, there were over 500. This past year, there was about half that, about 250. So we think a combination of factors is going to lead to a better deal cycle. First, we're going to get a new head of the SEC. We're going to get a new head of the FTC. And we think the Trump DOJ is going to be less likely to pursue antitrust actions. That's really going to lead, we think, to a pickup in M&A. U.S. companies right now have about $3.4 trillion in cash on their balance sheets. And we think a lot of deals have been reluctant to be done because of government scrutiny. As that dies down, we think we're going to really see a pickup in M&A, which is really going to help investment banking fees. In addition, we think we're going to see more public equity offerings. It took a long time for deals to get through, offerings to get through the regulatory cycle under Gensler at the SEC. We think that is going to be streamlined, and that faster regulatory process is going to lead to an uptick in underwritings for the investment banks.
If we see a big tick up in new IPOs this year, then are there any companies coming up that we should watch out for?
We think it's going to continue to be areas, really technology is going to dominate that. We also think there's likely a pickup in healthcare IPOs in areas like biotech, et cetera. And I think some of the buzzwords we've heard about AI and quantum computing, these are areas where we could see more offerings as well.
You mentioned the impact of the new administration on regulation and less antitrust enforcement. The banks have, of course, been lobbying for some of their capital requirements to be dropped as well. Are we likely to see that happen?
You know, that's possible. That's possible. And if that does occur, we think the banks would return capital to shareholders in the forms of increased dividends and more stock buybacks. So, and in general, the bank yields are above the overall S&P 500 dividend yields. So we think that could be a really good picture and part of a total return for investors. So we do like the space right here.
What kind of picture then are we likely to see in this week's numbers from the big banks?
Well, interestingly, Jefferies reported last week, and they had very good trading and very good investment banking numbers. So I think for the big banks on the trading side, we're likely to see increases of 15 to 20% in trading revenue. On the investment banking side, which is coming off a very, very low comparison from the fourth quarter of last year, 2023, we think we're likely to see gains of 20 to 30% for the big banks. And so we think this is really the beginning of a pickup in investment banking revenues for these giants. And we think that's really going to help the stocks over the course of the year. So we think it's actually one of the sectors in the market that looks the best fundamentally and is also actually acting pretty well technically.
Is it possible, though, that an ease up on banking regulation might be risky for the banks themselves? After all, the easing up of Dodd-Frank under the previous Trump administration was blamed by some analysts for the failure of small banks like Silicon Valley in 2023.
That's always a risk. I think when those things happen, they tend to happen over time. So I don't think in this first initial phase of lower regulation, we really have to worry about that. But you do hope they've learned their lesson and they don't create the excesses they did in the previous cycle back around 2008. Right now, though, we don't see that. So we think for 2025, it's actually a pretty good setup for equity investors.
Randy Watts of O'Neill Global Advisors, thanks so much. And that's your roundup of the banking sector. I'm Elena Casas and this is Reuters.